And we start now with that better than expected November jobs report. Almost 200,000 jobs created versus 190,000 estimated. The largest jobs increase coming in healthcare, where 77,000 jobs were added. The unemployment rate also fell unexpectedly to 3.7%. Let's get some reaction from Karin, Kimbrough, chief economist at LinkedIn. When you see these numbers, how much do they line up from what LinkedIn is actually seeing on the platform? Job openings were down, which some people feel like is a good sign that the market is cooling, but wages still hanging in there and people are still getting work.
Yeah, absolutely. So the signals on our platform are exactly what we're seeing in the data. We've been saying for a while that healthcare had a lot of momentum. I mean, easily 18 months, we've been just seeing job growth in the healthcare space. We've been seeing a lot of momentum in construction since earlier this year, like February 2023. So a lot of what we're seeing now is exactly what we've been seeing for a while on our platform. One of the more interesting things, though, as you point out, much stronger than expected kind of labor market. I mean, we were looking for maybe 170, 180,000. So this beat our expectations. But we're seeing a little bit of stabilization in the tech sector. You know, it's been struggling for a while, a lot of layoffs in that space. And now what's happening is a bit of momentum, actually a little bit of increase in hiring in the last couple of months in that space. So that's something that we're watching going forward.
Are you seeing other signals that employer leverage is strengthening? I seem to remember there being some reduction in the availability of remote work, for example, as more employers are saying, hey, we really want you back in the office. Are those signals there as well?
Yes. So as you may remember, and you point out, there was a point at which it felt like the job seeker or the employer had a lot more leverage. That may be starting to shift. Employers definitely want to see folks back in the office. They're now negotiating not for 5 days a week, but just 3 days a week come into the office. But we still see a lot of preference by job seekers for those remote roles. They apply to those in greater quantities than they do for the on-site role. But hybrid seems to be the place where we're sort of gelling, where really there's a kind of consensus that hybrid's where we're going to be going next, at least. Now, really interesting point you make about the leverage, because one of the other aspects of the leverage is whether or not people are moving jobs. And what we're seeing is a lot of people are still kind of staying in the job that they've had for a while. There's not as much churn as there was 2 years ago. So the true test of what the leverage is when we start to see quits rates maybe pick up again. And that may be much later into 2024 before we see that.
And a lot of people are still telling you, Karin, as well, that they're looking for a new job next year. What does that tell you?
Yeah, so many people are now starting to say that they plan to look, 40% say they plan to look for a job next year, especially millennials and Gen Z. And so members on our platform are signaling that, look, I've been in this job for a couple of years. I like it. I want to stay put in case there's a recession. But as people start to think maybe there's no recession, maybe the soft landing is a reality, they're going to start to explore options for next year. So I think the true test of what happens is when we start to see that churn pick up. But in the meantime, what I will tell you is for those who are job seeking now, they're applying for more roles than they were in the past. And that's a sign of job seeking intensity, that people are starting to feel a little bit more motivated to go out there and get a job than, say, a year ago or 2 years ago. So that job seeking intensity by the job seeker is really picked up.